Good morning, everybody. It's January 31st, 2022. I'd like you to welcome you to the live trading room as we get started. Glad to see everybody here. Please take notice of our disclosures. The intent of this information is for educational purposes only. If you click on the button for your trade, then it is your trade, okay? A little bit about Kaitlyn and myself. And keep an eye out on our Facebook and our Twitter for stock picks. We have a new bundle package out there. Prices are starting to go up, so keep an eye on that if you want to get in early. All right, let's go ahead and get started. One of the trades that we're in currently, I was hoping it would wait till we got started, but I decided to take off before we started our class. Okay, so yeah, did anybody get a hold of that one? Okay, Jason's in. All right, Marco got a piece of that. Nice job. Yeah, there's a oh, okay. Yeah, I just didn't know what pop in meant. Okay. All right, I'm gonna step aside and let Kaitlyn step in and do the pre-market, and I'll pass that right over to her. So I'm gonna stop sharing there.
Good morning, everyone. Happy Monday. How's everyone doing? Good to see you all in here. I see some of you guys got the gold trade set up. That's going to be a good one for today. Looking at some of these indexes right now, a little bit elevated risk as far as the fact that we've been seeing this consolidation over the past few days. So just want to be cautious of that and wait for more of those confirmation entries. So starting off pre-market routine, taking a look at the news, want to get a gauge whether we're more bullish, more bearish with the news. Overall, a little bit mixed for what I've been seeing. Taking a look at the news this morning, you can see looking at the main articles, market corrections are good buying opportunities, but only when this happens. So this makes me think a little bit more bullish, but again, right now when we're looking at the charts, not really seeing that strong momentum to the upside quite yet. Going over to Yahoo Finance, we can see why the stock market is as vulnerable as someone after a bad breakup. Again, we're trending to the downside right now, so want to stay with the trend since we have been making lower highs and lower lows until we see more of that confirmation to the upside. Over here as well, stock futures fall ahead of busy week of earnings. So again, some of these mixed signals, a little bit more fearful with the markets pulling back, but then Market Watch looking for those good buying opportunities. Again, not quite right now, just since we are in that consolidated price range. So going over to Econo Day, what we want to be looking at is what's going on for the day as well as the rest of the week. A lot of these reports can cause volatility in the market, so just want to be prepared of that. Today we have Chicago PMI, that's at 9:45 a.m. Eastern Time. Dallas Fed Manufacturing at 10:30 a.m. Eastern Time, and also keep an eye on the ones that are in bold. This is going to be the Fed chairmen that are speaking throughout the day. Rest of the week, pretty busy, so just expecting a lot of volatility. I know one student reached out to me this weekend and said, the market conditions weren't for him just because, these aren't for novices with the markets pulling back like this. So keep that in mind if it is a good week where you're seeing there's more volatility and you don't want to be over trading this week. It's always good to take a step back and just observe and learn and not necessarily over trade during this week. So got that bit of feedback from one of the students and thought it was good to share. Going over to the charts now. So again, big pullback in the markets with the S&P, and now we're in this consolidated range right here. So what this means overall is we're just going back and forth between the buy tickets down here and the sell tickets up here. So while we're within this range, going to be much more elevated risk. Even picking our buying territories within this range, more of just that choppy action is going to be elevated risk. So typically we want to look for our buy and sell territories that are just outside of this range. We did break the prior session's high, which typically means looking for more trending opportunities to the upside. But again, tying back in what the trend is right now, being to the downside, taking long trades to the upside is going to be more elevated risk. So do have a couple buying territories in the middle. Just again, keep in mind, since we are consolidating here, choosing these buying territories overall are going to be more elevated risk. First one is going to be a 3-minute buying territory right here. So moving over to the left-hand side of the chart, we can see location-wise, we're in that area where we had the 3 touches on the top side. So just below that, looking for that group of candles. You can see also on high volume. So entry on this one is going to be 4378.25 with our stop at 4360.25. So again, 4378.25 with our stop at 4360.25. You can see here, so again, always keeping volume on my charts just as an additional odds enhancer to see where there's a high amount of institutional activity involved. And right here, I'm also keeping an eye on this area here. So I know we always like to talk about the 3 touches, but up here is going to be that area where we see that potential area where we may want to look for a breakout opportunity. So we can see that this area has been tested once, twice, 3 times. Now price coming back up here, looking for the leg-based group of candles to then take the breakout to the upside. But again, with us being in that consolidation phase, breakouts to the upside, just understand we're going to be taking on a little bit more risk with that versus trending trades still more to the downside. So buying territory here, potential breakout opportunity to the upside there. And I think we have a selling territory a little bit higher up. So once we get above this area here for that breakout, just keep in mind we do have a 5-minute selling territory here at the origin of this move to the downside. That one's going to be at 4458.25 with our stop at 4487. It's always good, especially on Mondays, to map out, both sides of the chart where your potential breakout areas and where your buy and sell opportunities are at. So breakout potential here, buy territory 4378.25. And then our sell territory is going to be up here, 4458.25. Going over to the NASDAQ, again, more just consolidation. So still making lower highs and lower lows. So there is the potential for another impulse move to the downside, continuing to trade with the trend. We're going to need to see more momentum to the upside to get that confirmation if we are moving higher. We did break the prior session's high, looking for a potential pullback into a buying territory. Similar picture with the S&P. With that buying territory, we can see, again, looking to the left was that resistance area right over here. So this is the evidence where we could see the sell tickets pushing price down and then this buy territory being formed just before that breakout to the upside. So entry on the NASDAQ, 14,266.75. With our stop at 14,195.5. A little bit different picture than the S&P. S&P, we had the 3 touches on the top side, so we're looking for that breakout there. However, on the bottom side, don't have that same picture. So looking for more breakout on the S&P, NASDAQ waiting for that pullback into a buy territory. Going over to the Russell, we did again break the prior session's high, pulling back now, but always look to the left and see that making lower highs, lower lows, we took out this low here, so more momentum to the downside. I'm going to show you the 10-minute buying territory first. So this area, just wanted to show you, not necessarily for a potential buy opportunity, but we can see that this buy territory was formed, was tested once, twice, 3 times already. So price coming back down here, we may be looking for more of a breakout to the downside. So just wanted to show you a little bit different picture of that, where we can identify that stack of orders. When it's been used up several times, price coming back down, we may want to anticipate that breakout to the downside. Russell has that picture I like as well, similar to the S&P. We have the 3 touches of resistance on the top. So looking for potentially a breakout to the upside. If we do get that breakup, so again, looking for a breakout above this point. If that happens, our next sell territory is going to be up here at the origin of this move to the downside. That's going to be, let me go to the left, right here, 1996.2, with our stop at 2009.6. So again, short entry 1996.2 with our stop at 2009.6. And again, just good practice to see where are the potential breakout opportunities, where am I looking for potential unfilled orders. In this case, may not be enough unfilled orders and would be looking for more of a breakout to the downside, and then potential stack of unfilled sell tickets up at this point at 1996.2. And then going over to the Dow, so did break the prior session's high as well, but do want to show you that picture as well, as far as this pink box being that prior sell territory that's being used up. So currently these sell tickets are still being filled at this point. Until we break above that, just want to be more cautious that there could be more momentum to the downside until we take out this area up here. So that's going to be a potential breakout point opportunity if we do start to push through this area. And just looking to the left-hand side, this is where that initial stack of orders was being tested several times. So looking for that breakout to the upside, get more confirmation if we are moving higher. We do continue to pull back. We have this buying territory here on the 8-minute time frame, 33,752, with our stop at 33,613. Now, what's the issue with this buying territory here? I'm just gonna, actually, that was a better picture right there. So what might be this one, or why might this one be a little bit more elevated risk to take? Let's see, who knows? See, I like the summer used. Yeah, so looking to the left, George says pivot, exactly. So when we look left, make sure we're not just stopping here and saying, okay, here's a zone, I'm going to take this. Make sure we're always looking left and seeing that, well, price has been here before, it's been here before and here. So looking left, price has spent a lot of time at this point. So as everyone is saying, I like all these different variations used, pivot, tested, 3 touches here, exactly. Then we'd be maybe looking for more of a breakout to the downside if we do start to reach this buying territory here. So always look left and see how many times price has been at a certain point. We can see this time and time again, areas where we may have looked for long trade opportunities, but then when we see those 3 touches in that used area, we often see price continue to move lower. So just be cautious with this area here. May want to take more of a confirmation entry. And then again, just looking at this big picture, we can see resistance here, support here, and we're just stuck inside that sideways channel right now. So great job, guys. Going over to the indexes, looking for those correlations across the board. S&P, as far as the last 5 or 10 candles moving up, NASDAQ as well, Russell moving up and Dow moving up. So seeing that correlation, that's going to be a good sign. And then bonds, we do want to see going in the opposite direction. So we see indexes moving higher, bonds also moving higher the last 3 candles, but overall we want to be looking for that inverse correlation between the equities and the bond markets. Internals, if the markets do continue to move lower, the one thing that we're always keeping an eye on is going to be the trend to see if the trend gets above 1.5 or 2. That's going to indicate a lot more buying, slowing the markets down as they drop. So if we do see that drop, keep an eye on the trend as a main odds enhancer for us. Tick advancing issues over declining issues as well, looking for those extreme points for either a bounce in the market or for potential areas where the market may turn or change direction. And then the VIX as well, if the markets are descending, a lot of fear in the markets, and the VIX is going to move higher. And lastly, pre-market indicator, looking for either a gap up or a gap down in the pre-market. You can see in the pre-market, we had a big gap up from the prior session. So more upticks and up volume in the pre-market typically means a little bit more bullish sentiment coming into play. All right, I'm going to pass it back over to Jeff, take a look at some of his trade setups, and we'll get started. Thank you, guys.
All right, good morning, everybody. As we started off in the pre-market, and you saw what we posted on Twitter and Facebook, the trade setup before we got into it. And occasionally you can go out and kind of keep an eye on Facebook and Twitter when some of these trades may trigger before our session starts, okay? Generally, we come in a couple minutes early just to kind of see what's happening and kind of hang out and chat for a minute, have coffee, and then we start promptly right at the top of the hour. So this trade, I took a couple contracts on the micro gold. We have a large profit margin potential on this, okay? As Kaitlyn was pointing out, some of the other zones on the equity indexes, just kind of be reminded, you know, when we start looking at this particular structure right here, and you drop down to the smaller time frames to identify your zone, just make sure you know whether it made a lower low or made a higher low going into it, because there's a couple of places that we'll look for. Now, tendencies tend to happen when we make a lower low, we go to the lower side of it. So just be prepared if something like economic or political news comes out and causes the market to react there. But pretty much I have the same exact zones, areas that Kaitlyn had posted. As far as the bigger pictures go, let's come back out here. History-wise, you know, we made these reversal patterns. And as we made these reversal patterns, price, we're kind of looking at right now, we're right over here where we're at that breakout point. And generally, I mean, if you go back and look at many of these, it's about 3 to 5 day move up as price breaks that. And we're right there, okay? Here we have another reversal pattern of fresh accumulation of orders, okay? And as we have that fresh accumulation of orders, what I'm anticipating is price moving up. Now, I'm not sure where it's going to move up to, but I do have kind of a projected area in where I intend to be watchful for it, okay? And then as price pulls back, you'll see on about a 60-minute chart that there's one of our candle formations right in that area between 43.67, 43.22 on the big picture. Now, price needs to move out of that and then come back before we get the big runs, okay? So again, moves out, comes back, get the big run. So as everybody's going to get excited about the market moving back to the upside, and, you know, we're shaking out all the bears. Now, keep in mind, most of the public does not even understand what a bear market is and how a bear market works. This is a normal correction, and it's big price move because we're much higher in numbers, okay? But don't get sucked into the bear market. We read the price chart, look at the footprints where the banks and institutions are hanging out, and we learn to see those footprints and navigate. That's for the S&P. For the NASDAQ, we're about the same picture. Brand new, fresh accumulation of orders. Look over here. Yep, the same picture. Fresh accumulation of orders. Now, how do we tell the difference between what is a fresh accumulation of orders compared to a brand new or price testing a zone? Well, it's quite simple. All you do is look to the left, and as you start looking to the left, there's nothing over here that was showing that this was a fresh testing a buy territory or a sell territory. So when that happens, we have to build, or price needs to build, a brand new fresh accumulation of orders. And often there is much media coverage during that because people are getting really hyped up in these violent swings. One day they're up, one day they're down, and the media is capitalizing on the emotions of traders in the marketplace. Okay. Yeah, this was just another area where we had that accumulation of orders. And you can start to see that these areas are pretty common. And they're usually in areas where price has broken that support area. History-wise, you'll see that this brand new fresh accumulation of orders repeats itself so many times. And this is why I've made some comments out there while people are saying, oh, bear market, bear market. I'm saying, okay, you guys stay on that side. You're going to be on the wrong side as we start making a final trek up into those bigger, longer running trends. And you can see the power of all of this. You know, once you understand what that looks like on the price chart, you start realizing that, hey, we're just making one of those little reversal patterns. Okay, well, what followed each one of those? Well, the move out, the pullback, and a very large trend. Move out, pull back, large trend. Move out, small pullback, very large trend. Okay, and here again, move out, pull back. So why am I expecting this? Okay, it's just history. Now, we always manage our trade at every point. So we know what our risk is going to be going into the trade. We know how our risk is going to be as we start to manage that trade. Okay. As far as the Dow, we have very similar picture on the Dow, similar reversal patterns, fresh accumulation of orders, and we're looking for that move out and then a pullback. Okay. Now it's going to be, it may be a little bumpy, or it may just take out this whole area right in here between 3470, so 34,771, 35,128. Okay. So the pictures on the price chart can reveal so much information that we have to pay really close attention to. So as we are looking for price to pull back, okay, right now the S&P futures are down 13 points. IBM, Goldman Sachs, slightly negative on the sessions. And we currently have 12 Dow stocks that are down over 94 cents. Okay. Now 12 times 2 is 24. So right now cash equals negative 24. Okay. And you start tracking the volume. Okay. So if cash equals negative 24, are they really selling this off, or is this normal volume? Is it light, or is it heavy volume? Okay. And that's what we need to pay attention to, is these little footprints and these little subtleties in the marketplace. So as you do your morning routine, your morning documentation, always take note of the number of stocks that are within that 94 cents, okay, either positive or negative, and then look over and document the volume, okay? Now, this is going to keep changing over time, but as you keep documenting this, you will start to develop a feel for what is normal volume, what is really heavy, or what is very light volume. And you combine that light volume trading activity with some of the information that we talked about in the pre-market, like the trend, the tick, the pre-market indicator. Right now, the pre-market indicator for the New York for the NASDAQ is up 417 points. Okay. Now, does that mean the market's just going to take off to the upside, or does it mean it takes off to the downside? Well, if you're still studying this and documenting, you really don't know until you gather these pieces of information over time. Okay. So how does the market open when the pre-market indicator on the New York Stock Exchange is up 419, 420 points? What is the follow through? Now, part of this documentation is it takes time for you to verify this. There are some classes that Kaitlyn and I have posted on the website about our pre-market routine and things like that. The things I'm describing to you right now with the QMI, the trend, dollar, okay, advancing issues over declining issues are described in some of those little 90-minute sessions that we have posted on the website. And we also have our trading with the smart money coming up at the end of the month, which is going to be a very significant review for some of you, but it is a very significant class to understand all the things that Kaitlyn and I look at in the pre-market to help us gauge which direction we're going to go. Okay. And it's important for us to have those pieces of information and gauge which direction the market's going to go, along with trend and along with other key factors on the price chart. But some of this fundamental data is very instrumental to what we see on that price chart and how we choose a direction for that price to move in the pre-market. Right now, markets are looking bearish. Volume is kind of, it's on the lighter side if you've been documenting it. You might say, oh my gosh, look at JP Morgan, 230,000 shares. Well, if you haven't been documenting, you don't know if that's normal, if that's light volume, if it's really heavy, okay, for this time of day. The key times to document this will be at 8 o'clock Eastern, 8:30 Eastern, 9 o'clock Eastern, and just before the market open at 9:30 Eastern. And you check this volume several times just to see if things are building up in volume as the market opens, or if they're still staying quiet. And sometimes if they're staying quiet, it just means that there's an economic report that is pending or coming out that we have to pay close attention to. Today, we do have a Fed chairman coming out. We have Chicago PMI that comes out just after the market open. The Purchasing Managers Index is an inflationary type number, okay? Right now, the big buzzwords are about inflation. What's going on with inflation? How do we handle it? And so on, okay? So economic reports that are connected to those, what we call as buzzwords, okay? And buzzwords are nothing special. They're just, you know, what do you see? Oh, market corrections are good. Misinformation, Netflix up to a buy by Citi. Boris Johnson getting, you start looking through all the headlines and things that are in big bold print. And as you start putting those pieces together, you start noticing that each day when you do that pre-market routine, that key words keep popping out. Now, the media uses those keywords and they keep playing on your fear and your emotions. I mean, and often the media is late. Remember, news, all of this information that we're seeing reports something that has already happened, not what is going to happen, okay? So when they're telling you it's a good opportunity to buy, yeah, we're looking at that kind of final push. It's already happened. I mean, we see that on the price chart, and the price chart said, wow, you should have been buying way down lower. Oh, well, okay. If we understand the dissemination of the information, then we can incorporate that into our trade plan, okay? Now, coming back and using that piece of information as far as the trend, okay? Got the pre-market indicator, we got trend in the pre-market, has been higher, and it's been a little bit on the bullish side of things, okay? Now, keep in mind, the trend does not trigger a buy program or a sell program. The trend says, get ready. If the trend is high and the markets are descending, then this can be a fairly decent opportunity for us to look to buy in a buy territory. Or if the trend is low and markets are ascending into a sell territory, we can look for that opportunity to go short, okay? So the market's just about to open. We're going to see a little bit of volatility spikes going on, okay? We have an opportunity to take the trade at the breakout above the Globex high with a nice profit margin up to 4,556. If price should drop down into our first small time frame demand zone, 43.77, 43.60, okay? We need to examine that zone to find out if the leg candles leaving the proximal line were bigger or smaller than the leg candles inside the zone, okay? So as you examine some of this, I'll bring up the Dow, okay? And on the Dow, I have one range right here where I'm looking to go long, okay? Now, just as a little education on this, is using that Dow and dropping down to the smaller time frames. There we go. I think it was right around the 6 minute or so. Yeah, okay. So as we look at the area over here, we have two zones, okay? Especially if you're using the leg-based group of candles. Okay, now the first zone is one right here. And as we're looking at that, we see the leg candles leaving the zone are bigger than the one inside the zone. Then we have the the larger size price range zone, but we can see that leg candle is smaller. So the lower zone, okay, is primarily what we're considering as an entry right near the top side. You know, we can use that zone once. The upper zone, we anticipate price to go deeper into that zone, okay? So our main focus in seeing the different types of zones, whether it's a proximal line entry or a zone entry, if they overlap like that, the way that we decipher that is by understanding whether the leg candle leaving is bigger or smaller, okay? And then we kind of isolate that area in between, okay? And my charts are, there we go. We're working on getting a new computer tower, so it'll probably happen shortly. As soon as I get to it, got so many other things in the pipeline. All right, so as we see in price come down on the Dow futures, okay, we're looking at 34,256, 34,11, or sorry, 34,188 area. Now that's that overlap that I just walked through and explained, okay? Our gold trade is still working. We got a high tight base. Looks like we might even see some stops being triggered. This is not necessarily a breakout trade on this time frame, all because we don't have the three touches. The three touches were lower, okay? So right now we're still in that breakout phase of this trade, and we'll see if we can if price will bring in some of the novice traders, which will be getting stopped out. Now, the move down on gold was simply a technical issue as far as price moving down just before the last trade date, okay? And then the last trade date was on the 27th, as we posted on the Twitter and on Facebook. You know, last trade date was on the 27th as the market settled out for the weekend and the end of the month. Now we're coming back in and we should see prices regain their move back up to where price levels were in the past, okay? This is a very common tactic that happens around the last trade date of these commodities. And we can use that as an odds enhancer and use that as a very key piece of information to help us put these things together. How many of you guys are still in the gold trade? Took a little piece of that this morning. All right, Marco's still in, great. Where are you at today, Marco? Are you still down in the Bahamas? I know you were sailing to another destination. Looks like you found some Wi-Fi. Exumas, Allen's Cay. Oh, nice. Wow, one of these days I'm gonna have to sneak down there and meet you in one of the ports. There you go, nice. Now that's living the dream. That's just awesome. But you know, sailing is nothing to shake a stick at. That's a lot of hard work too. You're constantly working every moment, kind of like in trading, navigating. RTY is getting ready to break up. Thanks for that. Let's bring that up. Thank you, Ed. All right, now, as Kaitlyn was pointing out on the equity indexes, we do have a area right here as prices get closer to the Globex high. Okay, price breaking above that Globex high, we could see nice little upside. Okay, now keep in mind this is having a pretty strong run at that. Do you have your leg base, Ed? But right now I'm looking at that leg base, and that is a lot of risk where you have to place your stop. Okay. So I know it looks tempting, but we're still right there in the first part of the day. If you choose to take the breakout, your leg base on this time frame is down at 1937. Okay. So I don't disagree with the breakout. What I am cautioning you on is, do we have the leg base before the breakout? Okay, it looks like we have another one that's up a little bit higher. And trim off some of that risk, 1951. But if that is outside your risk parameters, then we need to wait for that leg base group of candles before jumping in front of it. Okay. I mean, if you're okay with leaving 1951, then take the breakout. Okay. All right, Dow. Nice little pop back up. Not yet in a buy territory. No real breakout for the NASDAQ. But the S&P also demonstrated an area up here as well. And on the 15-minute chart, we do have leg base, but it's clear down at the Globex low, looking for that range. Okay, so let's drop down to a smaller time frame. We still don't have the leg base. We're still pretty far away from that Globex high, and just need that picture to develop there. Okay. Come on, gold, break above 1800. That would be a beautiful thing. All right. Okay, so we also had crude oil. Crude oil is in a tight range, and we have a support area. A support area that has been used up several times, 86.22. Price breaking 86.22. There's a breakout trade potentially down to 85.25. $1 move there. Breaking out to the upside, we can see that there's on a small time frame a resistance level at 88.21. Okay. Now, what's going to make the crude oil move is going to be things that are outside the price chart, which are the things that are happening in the UK. So short-term trading until we get a good direction. On natural gas, we're looking for a pullback. Okay, pullback 4.090, 3.964. And I left some of the things that I was documenting here between resistance and support. And right in the range here, I had a small time frame zone that broke through. And then we had another one that broke through, and then it came all the way down to the far outside of it, and we found a zone that worked. Now, this is one of the first documentation that I've seen where price came inside resistance and support, but there was also another clue right here where we had the 3 touches, okay? As a team, all of us in the room here, we're constantly monitoring things. Kaitlyn is also, and myself also monitoring, which zones work in between a resistance and support area, or used supply and used demand, okay? I got the wrong contract on here. Let's see, NGH. There we go. All right, so yeah, we need just to trigger some of those stops. As we start looking over here, there's really no supply or sell territory until we get up into the higher range, okay, where we have the 3 touches. Again, the 3 touches here, we did not have price broke out before it came back up. So in a way, as we start looking at the last couple of pivot points on the gold trade here, did price make a higher high before we had that move out? Okay, and as we see it made a higher high, the more detail is going to be that price may go to the upper side, okay, up to the 1846 versus using the lower zone. So target 1 and then target 2 as price makes its way back up. And these are key things. We did not have a solid bounce out and then come back in, okay, and take it out. We mainly made a higher high before we took out all of that leftover buy orders, okay? So you can have a short-term target, 1831, and a little bit longer term up to that 1846. All right, good question, George. Good to see you. Let's open this up. Now, I have the range. There's a couple of ranges, and we all know that gold likes to dip back into that range, okay? So opening the chart up just a little bit more and then dropping down to small time frame, okay? You can see that there's a couple of areas in that range, okay? And the lines that I have marked on here were not to mark a zone, they were to mark basically a breakout trade to get into the trade, okay? On this 20-minute chart, as we see where price had gone into that buy territory and been rejected, we can also see that we made a higher low before price moved through that area, okay? But there's also another leg-based group of candles between 1789, 1786. Now you can continue to drop the picture lower, the time frame, to get a little more detail into these ranges, okay? Don't be shy about doing it. There's a couple of zones that are overlapping each other as you start breaking down. Using these additional odds enhancers, okay? There's a couple of little areas, 1790, 1788, and also 1787 by 1786, okay? And yeah, as soon as we get up into that territory, we could get up there pretty quickly. Yeah, and we really don't have those consolidations, okay? So stepping back out to the bigger picture, let's take the breakout zone off. And if you're looking for price to come back into that buy territory, I would say between 1790 and 1786, okay? Kind of use both of those, manage your risk. You may not be willing to risk that 4 points, but you can risk a couple of points on the smaller ones as you kind of break into that, okay? All right, so let's come back out on our equity indexes. Russell is breaking out. If you chose to take that breakout trade, then your stop loss right now would be about that 1951. That was a little more risk than I'm prepared for, so I will avoid that one. Dow, not yet into a zone. Looks like the NASDAQ broke above the Globex high, okay? But it didn't give us an opportunity to get into the trade yet. S&P. Looks like we're, potentially, no, 2 minute. Yeah, we could probably tighten up our stop just a little bit as prices getting up into that range. Let's try the 1 minute. Oh, there we go. Okay, so S&P is setting up. We have a 1 minute leg base, which is going to help us greatly reduce our risk on the trade. Stop loss 44.18. Okay, so as price continues to move up a little bit higher here, recognizing where our stop loss is if we take the breakout. Right now, it's currently 44.18. We have a leg base. We're all the way to the 1 minute chart. So if you are going to look at that breakout trade, it's going to be 44.36. I'm just going to stick with the one contract at this point. Yeah, we just had an economic report come out, so the markets are kind of trying to decide how that PMI number is going to work. So I'm going to come and set this trade up. Let's put a horizontal line on here so I can see that. 44.37. Okay. $44.37.5. I'm going to adjust my stop loss down to 44.18 at this moment. And we're going to be setting our targets on something much, much higher. If we can get into this, be 45.56. So I may take my profit off well in advance from that. Okay, but right now that's I'm just going to use that as a reference up there. Okay, for that target. We're seeing gold pull back just a little bit as it consolidates. Now, key things to keep in mind on this consolidation and the move up, okay, is when we make that high tight base. So what is a high tight base? Well, price moves up and then it pulls back just slightly, okay? So when we have that move up and that slight pullback, what is a slight pullback? What's the definition of that? Well, it's generally you take that last move up, and as long as it's consolidating sideways right around that 23.6% retracement, okay, right around that 23.6% retracement, it generally has momentum to keep going to the upside, okay? So, and I take a measurement from this last swing to the upside, and I can see right now it's still a high tight base, okay? So in using just a Fibonacci projection tool, okay, using that percentage retracement, okay, we can look for 1803, and then on the outside, look for 1810, 1811, okay, as long as we keep holding that shallow retracement, okay? Right now, there's no reason to adjust your stop, okay? If you are thinking about adjusting your stop, then you're feeling pretty good about the profit, okay? You got a whole day ahead of you. Can you just take that profit and would it be a good day for you? Okay. One thing in the short-term trading is to trust what you're feeling. And one of those feelings is when you start to have that debate. Got the little devil on one side, little angel on the other side, and one says, get out. And then the other one says, no, adjust your stop. You know, listen to the little angel and put the money in your pocket. And then over time, you can study and hang out with us, and then you'll start to learn, okay, the fears that I had before are dissipating because I now have more knowledge. This is a little piece of knowledge that I just shared with you, the 23% retracement in a push, okay, often does not do a very big retracement, okay? So another opportunity to potentially take the breakout trade above that area, okay? But at any time you feel a little uncomfortable or start to have that debate, it's time to take those profits. All right, let's assess the cash value. Right now, the S&P is down 1.5 points, okay? I have 11 Dow stocks that are negative over 94 cents, and I have 1, 2, 3, 4, 5 that are positive. So if I take 11 and minus 5, that leaves me with net -6. Okay, so 6 times 2 is 12. Cash equals -12. Futures are -1. Futures are overbought by 11 points. Now, when futures are overbought, we're looking for an opportunity to sell short. When futures are oversold, we're looking for an opportunity to go long, okay? So right now, understanding that the S&P futures are overbought by 11 points. If we took 11 points away from the 21, that's going to put us right down where cash and futures are going to be fair value, right about that 44.10 mark at this point, okay? So the dotted line that you're seeing on the price chart just tells you that that's where cash and futures are at par, okay? Now we're starting to see kind of a shift in the stocks as they are starting to get stronger. And we're seeing that once we started our session, we had like 12 Dow stocks that were negative and only one that was slightly positive. Okay. And since the market is open, things have changed dramatically. Okay. Oh, this is pretty cool. This was a friend of mine. We had mapped this out over the weekend, and my friend Summit, he he bought, I don't know, I think it was just 10 contracts of an option on Friday on Apple at 6 pennies. Okay, so we had $60 into it. Okay, by the end of the session, that $60 went up to 20 cents. So he netted $980 on a $60 option play on some of these on the last minute option. Okay. Now I told him it'd get up to that 171. And then when we take the valley to the valley and we map out the time, it's got about another 10 minutes before we start to see that Apple is going to make a change in direction. Now, this candle is forming, and right here is a timeline. Now, notice that the timeline matches up with the 10 a.m. reversal. It's not rocket science. Almost 99% of the techniques that are out there are all based on price. Very, very few individuals know how to assess time value or the time in charting and trading. So, you know, in the future, there's going to be some more and more classes that we put together going into that. Okay, understanding in price and time when the market should change direction. Okay. Yeah, Summit is he's quite the extraordinary trader. One of my people that I confide in on a lot. All right, crude oil showing a little weakness. Okay. We're also seeing that gold is pulling back, and that's about the normal time that gold pulls back. Russell, still showing some strength. Anybody take the breakout on the Russell? I know it was a little more elevated risk, but there was a nice little, there's a large profit potential on that as we get back to the upside. ES is about to break out. Okay, thank you. Okay, and we're about 6 minutes away from our 10 a.m. reversal. Okay. So keeping that in mind, that we might have a little wiggle around that area. NASDAQ still showing some strength. Amazon's doing pretty good. All of the big NASDAQ related stocks are, except for Google, are pretty much going in the same direction. Okay. Oh, you're in Russell or the NASDAQ, Dennis? Okay, nice. Yeah, it was funny, you know, there over the weekend got a little heat, not a heat, we got a little few debates going on. You know, there's so much information out there that says the markets are bearish. Okay. But when you look at the price chart and go back and look in history, you go, man, things look a little bullish. Okay. From my perspective. And it looks like on this larger time frame, the S&P is getting ready to break to the upside. Keep in mind, we have 44.57 on a large time frame. And then we come up to about that 45.49, that range. And then we have 44.57. So each one of these black lines is a place where we might see a little bit of resistance. Okay. Not necessarily a trend change, it's just a marker. Okay, and all these markers are based off of Fibonacci retracements, extensions, and so on. Okay. All right, still looking good. Yeah, we're approaching that area. We're 3 minutes away from the top of the hour. Do we have any more economic reports coming out? Are we seeing that the dollar is starting to break down? Okay. Yeah. Now the dollar has potential to come back down to the other side of that support area. Okay. So it's a nice little topping pattern up here. Something that's very common that when you see that topping pattern occur, outside a resistance area, okay, that's usually a really good opportunity to see price come back in to that range. Now you might see me reference my text. I'm monitoring my father. He's just getting him. He ended up having to go into the hospital over the weekend with, some of that COVID, but he also has a lot of other ailments, some water around his heart, some water in his lungs. So everything's kind of really touchy right there. Yeah, thank you, Jason. Yeah, with all this stuff going on, I don't want to kind of focus on the COVID part of it. It's he has a lot of other things that he's been going through over the last few years. But every time I get a text, I'm just checking in. Thanks, Marco. All right, so seeing that the dollar may potentially start to move back down, we're assessing the trend. Where is that trend reading? Okay. Thank you, Sheila. The pre-market indicator this morning was up significantly, okay? So we want to document that as well. And we're starting to see that as we reload and refresh, how is the media sending its information out to the market? Are they getting more bullish? Are they getting more bearish? And remember, the media always reports something that has already happened, not what is going to happen. We're always getting that feeler, okay, about ready to take the S&P. And look at the Dow stocks that are starting to come in, okay? Very nice. So as the S&P starts to move out and break out, we want to closely monitor IBM and Goldman Sachs, which are not exactly in tandem at this moment. We can see that IBM is to the downside, and we can see that Goldman Sachs is to the upside. So we're getting a little bit of that divergence. In order to get a good price movement up there, we would need to see both IBM and Goldman Sachs going in that same direction, okay, to get a little bit more of that move. Now, I'm just using one mini contract, okay, as price is moving up. Anybody get a piece of that? Nice job. Anybody pay for their monthly membership already or the subscription? There you go. You know, in any of your education, you want to make sure that that the market pays for what you want. Okay. And this is, you know, I kind of jokingly about it, okay, but I do want to make you aware of it, that when you come into our live trading room, that, you know, our main focus, Kaitlyn and myself, main focus is to help the students recover what their monthly subscription costs are, okay? There you go, Stefan. So, you know, let it work. Crude starting to hold. Gold getting its little pullback, okay? So remember our conversation earlier, you know, when it feels good, take the profit, okay? And that's, you know, one of those things when you start to go, well, should I adjust my stop loss up? At that moment in time, you were spot on that move, Marco, okay? Trust that intuition, okay? Either let the trade work, leaving your stop where it was. The moment you want to adjust it, take the money, okay? All right, S&P, now we have a breakout of that range above 44.48, which is now coming into the bigger picture breakout area. Yeah, Sachin. I agree. Wow, look at that NASDAQ rocking, beautiful. And it took out that range, okay? So NASDAQ has, you know, we're looking at 15,500, 15,600. There's really nothing in the way going back up there, okay? Now we do have some smaller, or we have some obstacles. So we have 14,734, okay? Where we might see price pause a little bit. If it closes above the 14,734, we're looking for about that 15,145, and there's really nothing in the way. So this is what we call is I guess we could label these green areas as a pop. Okay. Anybody know what POP stands for? Pocket of points. Okay, pocket of points. All right, so we are now at yeah, right after the 10 o'clock reversal, price popped up. Dow really doesn't have the three touches. It does have a right above the Globex high though. We have those areas that also Kaitlyn pointed out is that resistance area where we could take a breakout right above that 34,696. Okay. And we want to, yeah, above that 34,696. We want to make sure that we have the leg base group of candles forming before that. So you may have to go to smaller time frame to bring that into your picture. Okay. Russell making a very big stride. Let's take a quick look up and to the left. Wow, we just have another breakout area up there. Short term. Let's set an initial profit target right about that 2014. And if you start getting into the bigger picture, we can see that there's another breakout area just above this range here. Okay. Yeah, we don't have a lot of resistance. We have a lot of areas where price may pause as it goes through these areas. A fresh supply or sell territory of about 2137, 2160 on the really small time frames. Okay. So we still have a lot of upside potential on these. And again, you're going to just have to wait through some wiggles. Okay. Okay, so on our S&P trade, there's another breakout for a larger time frame, 44.48. We may see a lot of stops being triggered, looking for 45.56 to the upside. We're going to need some help from IBM. Right now, we can see the general slope for IBM is down. Goldman Sachs is up. So it's still a mixed market, kind of like an inside day. You just have to be a little more defensive. But as we're starting to notice, we're getting fewer Dow stocks that are negative over 94 cents. Right now, we have 9 negative. And we have 1, 2, 3, 4, 5, 6, 7, 8 positive. Okay. So futures are overbought relative to cash. And we often see that there's some extreme moves that futures will move away from that cash. Okay. Then kind of revert back to the mean. One way to monitor that is to use the tick, $TICK. And using the tick, okay, when we start saying, oh, should we get out right now, is when the tick starts to get in these extreme areas, is when we're starting to get to that exhausted area. Now you combine that with time, okay, the quarter hour between 8 a.m. and 11 a.m. Eastern, okay? And when we combine that together, we're coming up to a breakout point. You're going, well, should I take the breakout? If it's not into that red area on the tick, yes, go for it, okay? But once it starts to get into that extreme, have your finger on the button and get ready to take the trade, okay? See, right now it's like, okay, that looks good. It's still going up and the Dow stocks are shifting. There's more buying coming into the market, but I still need IBM to help out. Okay. A lot of things that we're monitoring. How many have participated in the S&P and looking good? All right. How much money you guys up on the session so far? Let's type some dollar amounts. Okay. Doug says 1,100, 600. Nice. Wow. Nice job, Marco. That almost feels like that's like a half a tank of gas, isn't it? Nice job, Summer. Oh, that's beautiful. Love that you're up there. Okay. All right. Still looking strong. Now watch the tick. You can search the tick on TradingView. Okay, I'll come back and show you that in a moment, Manuel. So we're looking, once it gets in between 800 to 1,000, that's where we kind of like a tachometer, okay? It kind of red lines, and when the engine red lines at the tachometer, it's like you got to get ready to shift, okay? Now we still have probably about 6 minutes left for that shift, and that lines up with the quarter hour as well, okay? So as I mentioned, using the tick, and the tick is just upticks over downticks on the New York Stock Exchange, okay? And as we get up, and I kind of use it as a gauge, like a tachometer, when price gets into that range, we're redlining, and within a few seconds of redlining, it's time to shift down to the lower gear and then start building back up, okay? And we're just right about that peak where we should be anticipating a shift to happen, okay? So using some things outside the price chart to get that shift, okay? Wow, nice job, Stephen. Practicing a scalp strategy on the yes, I scalped 150 and have a runner up of 675. That is beautiful. Great job. Are they using all micros or are you using the mini? Up, look, you see how the market just shifted? Yeah, sometimes the dollar amount is a little bit more rewarding trading the minis versus the micros. See how price got in there and it kind of shifted down, okay? But see, you have to use that shift in the tick along with time in the quarter hour, okay? Daryl, I'm using this more for the theatrics, okay? To help teach you a lesson and teach, how to use that tick. Now, if we're using some momentum trading and some active income trading, like what we do in the live trading room on the equity indexes, okay, it's like doing a little fast driving. When does that tachometer max out, okay? Now, if you're on a large time frame, it's not going to make that big of a difference, okay? But if you're using these small time frames using momentum, it has a very big impact to when to grab that money, okay? And when to expect in price and time and sell territories and buy territories when everything starts to line up, okay? See, what is going on right now with the tick not getting up into that range is we don't have participation with IBM. IBM and Goldman Sachs are going opposite directions. I need something outside of what I'm looking at on the price chart and just watching my P&L go up and down, okay? See, the profit and loss is what often impacts a trader's decision to get in or out of the market, okay? So what can we look at outside the price chart? Well, I usually use IBM and Goldman Sachs, but IBM and Goldman Sachs are not doing what I normally expect. So how do I get a broad picture of the whole New York Stock Exchange? What's going on? Well, the tick helps me recognize that, okay? So what I'm exposing you to is some of the things that we will be doing in that Smart Money course is to explain some of these in the pre-market to help us anticipate this direction and where we're going in the overall for the day as traders are setting up, okay? Using some very specific information outside the price chart, okay? Now, the whole time that we're anticipating the shift in the market and we're looking at this momentum and we're watching time, we clearly recognize we have 1, 2, 3, 4, 5, 6, 7, 8 Dow stocks up, and we have 8 Dow stocks down around that 94-cent range. So right now, cash, the stocks, equals 0, and futures are at 29 points. S&P futures are 29 points overbought. So you can understand my tension if they're 29 points overbought and price arriving at that tick, and I don't have support of IBM to keep this thing going, that I'm ready to take a profit very soon. You're going, oh my gosh, what did he just say? Yeah, there's a lot going on, okay? As you start to realize going through here, we're not looking at one thing, like just watching that red and green candle go up and down and watching the P&L go up and down. We're looking at many things outside the price chart. The timing of getting in and managing the risk is all done on those smaller timeframes, okay? But this live trading room also will be a good thing to go back and reference, since we've had so many of these little pieces of information. Does the tick relate only to the ES or all equities? Now, you'll notice that the tick is based off of here in the header. You can see that the tick is related to the New York Stock Exchange, okay? And when I come over to the NASDAQ, I also have a tick Q, which is related to the NASDAQ. Now, not just the NASDAQ 100, okay, but the 3,900, the composite. This is a cumulative tick. So this is a broad base picture, okay, not just as 100 stocks, okay, on a NASDAQ. This is the NASDAQ exchange where we have about 3,900 stocks in there, okay, that are all moving in that same direction. Which brings us into our internals, okay? What is our advancing issues over declining issues? Okay, what's going on with the VIX? Okay, where's the fear? Where's the volatility? Okay, and we can also see that the trend has come back into a neutral area, not strong bullish and not strong bearish, okay? A good resource for understanding the tick, the trend, the VIX, and all those things are investopedia.com. And we go out to investopedia.com, you can go over to a little magnifying glass, and like here I have trend, pre-market indicator, tick, okay, and I can get that information. I can also come over to Trading View, and I could type in tick, T-I-C-K, and I can say that's an index, okay? New York Stock Exchange, a cumulative tick, the NASDAQ, a cumulative tick, the Dow Jones, the tick-E, okay? Dow Jones tick indicator. And if you know how to use the tick, the trend, the VIX, okay, with in correlation as to buy territories and sell territories, you can have an extreme advantage over other traders, okay? And their interpretation of the direction that things are moving, okay? So even though we're watching a trade work and manifest, okay, we just passed the quarter hour. Oh, watch, thanks, Shaw Dave. So if I'm using the tick on the S&P, because most of the S&P, most of the stocks on the S&P 500 are listed on the New York Stock Exchange. All the Dow 30 stocks are listed on the New York Stock Exchange. So we can use the tick in a couple of different places. And notice it's getting into that range now. So the tick getting maxed out and the YM getting to the breakout point, do you think I'm going to hesitate on taking the breakout? Market's getting ready to shift. Good job, everybody. Nice way to put it together, okay? So I need a little more evidence to take the breakout on the Dow, okay? And we're at that point where now we made the shift. It went in between the red line. Things are pulling back, okay? We still don't have a lot of support from IBM. Goldman Sachs is going strong, but we need some help from IBM if the markets are going to continue to go higher. Okay. So at this point, for momentum type trading, once that got into that range, okay, right around that quarter hour, okay, and I would say when you're using the quarter hour, use up to about 3 minutes after the quarter hour, okay, and use those pictures, okay, and use those times to kind of monitor what's happening. Now, as I'm still watching the Dow 30 stocks, I want to see that they start shifting, like this DOW starts to get back below 94 cents and so on, as the markets start to gain their strength and get back up, okay? So as we're watching IBM over here, we see it's not necessarily going down, but things have started to flatten out a little bit. So as IBM starts to flatten out, that's a good thing, as long as that Goldman Sachs continues up. But what we're looking for is, when does the IBM start to push higher? Then we're going to start to see another push to the upside. And we're going to start to see how these stocks start to get more towards the positive. Wow, Marco. Happy dance. Get out on that bow, do the happy dance. People will wonder what you're doing. Nice job. Great job. All right, so yeah, let's take a look at the NQ. Now we can see, even on the tick small time frames here, that you know, the trend has also started to get a little choppy and congested up here. We're also seeing that all the big, large market cap weighted stocks on the NASDAQ also, except for Facebook, are starting to flatten out and base, okay? So once they all start resuming back up, we can use the stocks as an odds enhancer. We can use the tick Q as an odds enhancer once it gets back above. And you can also put you can put a range there. Data. So when using the tick and the Qs and the tick Q and things like that, just coming back to it, I don't really worry about the trend changing until the tick gets back down below. Okay. And you can use a range like this, say, okay, the neutral area 0. As long as that tick stays up there, there's going to be more profit potential. Daryl, I'm short-term trading, so I monitor all of those on a 3-minute chart. Good questions, everybody. Good questions. How many rode this out, or how many? Well, how many are still in the trade? Thanks, CP. Clark. Yeah, Clark, take your time, okay? As you get familiar with my teaching style and trading style, nice job, George. Okay. That's okay, Natalie. We're still working on those. But coming back down to, you know, Clark's comment, Clark had a great comment. Second week here so far, no trade taken, but I've profited a lot on the knowledge, okay? Now, what I want to caution you on, Clark, is you have to get comfortable with Kaitlyn's teaching style, my teaching style, and don't rush that, okay? Just because we're taking some trades does not mean that that is going to be a trade that's going to be right for your trading style at this point, okay? When you're ready, you'll take that trade, Okay. But there's a lot of knowledge that you can learn in here because I have the flexibility to talk about some things that I can't talk in other forums. Okay. And, just bringing a lot of these additional odds enhancers into play. Okay. So glad you're here, Chuck, and, just jump in anytime. Ed says 5-minute supply zone. Well, I am watching it carefully, Ed, because see what's going on over here, Ed? And we're getting towards we're 6 minutes away from the bottom of the hour. Is IBM helped us at all through this morning session? No, okay. So I'm ready to take a profit at any moment. Okay. Now, with the tick here, there's a couple of other reference points that you could put. Okay. One being 0. Okay. Let's format. Okay. So as long as the tick stays above 0, so if the tick should have a sudden spike below 0, I'm going to hit the market to get out. Right now, it's still accumulating and the stocks are still becoming more positive. Okay. But see, we're also looking at IBM is now going opposite direction. Okay. Now, price did run into a 5-minute zone for yourself. How did you handle that? I didn't see the zone over there. Maybe I need to go back and look. It's kind of like we're driving through traffic and we're trying to figure out where everything is. And a small pullback into, small pullback. Right before the bottom of the hour is not a bad thing. And also on this small time frame, you can see this whole area right here is a pocket of points. Okay, so price breaking out above this area, 44.87, could be a substantial pocket of points. Okay. Yeah, I didn't see that 5-minute zone there. Okay. So now what we've seen is that as we're looking at this, price breaking above 44.87. I'll take a quick look at that again. So breaking into that range, we should see a sweeping, strong move up into that range. Okay. But the fact that IBM is pulling back, we didn't cross the 0 line yet. Okay. And we got 2 minutes left. Okay. Up there it is, 0. Okay, give it a 2 minutes. See if we can get that pop back up right at the bottom of the hour. Nice job, Manuel. Yeah, I saw that area over there, Ed, is really congested. So I'll go take a look at that. I'll write it down. Okay, 1 minute. Come on, pop back up there. Okay, IBM got a small candle right there. Goldman Sachs got a green one. Okay, still mixed market there. Great exit, Manuel. Yeah, 1 minute. See, what I'm working with you guys on right now is how do you stay in these trades when it was up 1,200 bucks, and you know, how do you stay through the wiggles and all of this? Okay. Well, it's the information outside the price chart. Okay. And now we have the bottom of the hour reversal, the last quarter hour. Okay. So we're getting a little pop back up. Okay. Now, if we can maintain that tick now being above that zero line, I'm good. I'm going to see this price move back up, and I'd like to stay in through the rest of the day. But this is a lot like driving in traffic. You're monitoring a lot of things outside the price chart. Okay. Oh, nice job, Ed. Okay. Trust why, one of the reasons you might be gun shy is, you're not seeing things the way you like to see them, and that's okay. Okay. All right. So we've reached the end of our session today. Can you guys tell me how much money? Can you type in how much money you guys made throughout this session? Just give me a good idea of this. Jason got 400. Okay. Wow. Dennis, great job. George, Summer. Wow, Summer, you pulled another 100 bucks out of that? Awesome. Hi, Erica. Make me blush now. The 650 bucks. Nice job. Wow, beautiful. Nice job, Natalie. Daryl, whopping it. All right, so good session. I'll be in and see you guys tomorrow. Keep your money in your pocket. And if you did good, do the happy dance, and we'll see you guys bright and early tomorrow. Have a great trading day and stay safe.